This banking stock has the potential to 4x by 2030. Based off my calculation, this stock can go above 526, which is over a 4x return by 2030. The stock I am talking about is called Dave's Bank. It is a small cap company. I know what you're wondering, but is this realistic? Let me walk you through the numbers. Let's first start with the revenue. One of the most impressive things about this company is that 2 years ago, this company was making 190 million to today almost making 320 million. That is almost 2x return in less than 2 years, which means on average, each quarter it was growing above 30%. Now, if we take a look at its earnings call, it reiterates those facts: 16, 23, 25, 30, and its most latest quarter, 41% increase in revenue. Now that we have general idea that this revenue for this company can multi-x in the future, let's go and ask ChatGPT what it thinks the revenue could be by 2030. So ChatGPT thinks it can hit 900 million by 2030. But I'm going to stick with this assumption because it's conservative, and for small caps, I think being conservative is the best option. Gemini says 1.2 billion. Not going to lie, that's around what I think. I think 1.5 billion very easily. But again, when it comes to small caps, being as conservative as possible is a positive. DeepSeek thinks 1.2 billion. Again, very, very possible. And for Claude, it thinks 600 million. It's already at 320. There's no way that it's going to have such a low number in the future. It's going to be way higher than that. So overall, the one I'm going with is 900 million. I think this is the right one. Even though I believe it can go to 1.5 billion, I want to be conservative because it is a small cap company and we want to have a margin of safety. So I'm putting down growth of 200% over the next 5 years. Another thing that really gives us confidence in the $900 million projection of ChatGPT is when we take a look at the earnings call, its new members increased by 4%, while the cost to acquire those customers went down by 14%. Its monthly transaction members increased by 23%. And the most important part that I look at, the one that really made me excited for this company, is the fact that its credit card spending went up by 19%. Now, whenever you use a credit card through this company, it doesn't offer the credit card. MasterCard and Visa does. It takes a percentage of your profit that you would give to MasterCard. For example, if MasterCard charged a merchant 3% of the transaction amount, it would take a portion of that cost that MasterCard took from the merchant. It's a bit complicated, but it doesn't hold any risk and it gets pure profit. On top of that, its biggest revenue source is that it charges you a subscription fee of $1. Now that doesn't sound like much, but over time, I expect that to go up as well. And you can see that's going up because they just added another 800,000 new customers, and rest of the metrics on this sheet look beautiful. Next, we're going to take a look at the number of outstanding shares and see, is this company on the road to increase or decrease the number of outstanding shares in the future? When we take a look at the number of outstanding shares, this company is a small cap, you got to understand. So it's doing rapid dilutions. Even at its latest quarter, it did a 16% dilution. In my opinion, once this company gets a solid footing, that number is going to go down dramatically. But for now, being a little bit conservative, I'm going to say it's going to dilute the shareholder by another 20% over the next 5 years. Now, you might think that's a bit bearish, but it's a small cap company, so I want to be conservative as possible. Next, we're going to take a look at its profit margin. It's currently 12.92%, which is almost 13. Now, very recently, and which I mean the last 2 quarters, that it actually started having an increase in profit margin. In the past few years, it was negative margins, meaning it was losing money to get customers onto the platform. I expect this type of trend to continue foreseeable future. I'm going to be conservative and say that it's going to have a profit margin of 25%. And far as PE goes, I am going to be conservative and say it's going to continue its PE of 37. If it can grow that fast, its multiple is going to go to like 50 or something, but then it would be too bullish. So I want to be a little bit conservative and say it's going to have a PE of 37 over the next 5 years. I mean, if this company can pull out these metrics, the sentiment, it's going to be sky high. So easily it's going to be 50, but we'll say 37. When we plug in all the numbers, we get a value of $526. I want to emphasize this is on a conservative metrics, which means you would do 306% better than the S&P 500, which is a over 4.5x return over the next 5 years. Now, let me talk about the risks of this company. Not everything is sunshines and rainbow for this company. It has fierce competition by SoFi. The sector which it operates in is being completely ignored by SoFi. If this company starts to make some serious gains over the next few years, you will see SoFi start offering the same type of benefits. At that point, I'm not sure what will happen to the company. It could file for bankruptcy or it could merge at a much lower price than what we anticipate. That is a risk, and all small caps do carry these types of risks. But that's what makes it worth investing in companies like these. They have massive risks, but they have massive potentials. You will never get a 5x return on any of the big tech, Amazon, like Google, or anyone else over the next 5 years as you are getting with this. And this is on conservative measures. You could even get 7x return if it exceeds these measures. Now, in my personal opinion, I will not risk the farm on this. Instead, the strategy I use is I have small cap be only 5% of my portfolio, because if they multi-x, positive impact on my portfolio, it only has a 1 to 2% impact on my overall portfolio's gains. So I'll personally be investing $2,000 in the investor fund for this stock, but I want you to do your own research, your own analysis, and figure out if this stock is right for you or not. Let this be a guide, not something you blindly follow. With that being said, please like, follow, and subscribe, and I'll catch you guys in the next one.